Good evening, my people. Today I want us to talk about valid break structure. How can you identify a valid break of structure? For example, you have an uptrend like this one here. What can you observe from this trend, the latest trend? We can say that the trend is going this way. Yeah, it is making higher highs and higher lows, breaking structures to the upside, forming higher highs and higher lows, and it is now going to form another higher low. So this is an uptrend, right? Now let's see the valid break of structures. For me to say that this is a valid break of structure, number one, I must see there must be an inducement, and that inducement must be swept, yeah, for me to say that this is a valid break of structure. And I also want to see the break of structure when it is retracing to take liquidity. I want to see that that pullback going to 50% Fibonacci retracement. Let me simplify whatever I'm saying here. Now check this. We have a trend from downside here. There is a trend that starts from this point, and then as you can see here, the price went up, pulled back a bit, but it never took any liquidity on this side, this impulsive move. It went, pulled back, broke this structure at this place, and then it pulled back, went up to break the structure, and then it pulled back to this point, but it never swept this liquidity on this side, but it reacted from this order block. It went up to break these other structures. What do I mean? Let me mark those inducements, those not valid break of structures. Whatever I'm saying is this one. Let me simplify it. Whatever I'm saying is this one. These are not valid break of structures. What do I mean? Let me clear this out. What I mean is this. There is a break of structure at this point. There is another break of structure at this point. But two breaks of structures, they never swept any liquidity on the impulsive move. This never swept liquidity, and then this one never swept liquidity, right? Now I want a valid break of structure to sweep liquidity. Now check this out. The price, yeah, I want you to see this. The price went all the way up. It came back, sweeping this liquidity here. It went below it a bit, sweeping the liquidity because all the stop losses are below this point, and then now it went up to break this structure at this point. It broke this structure. So I can say this is my valid break of structure. What do I consider when I'm saying a valid break of structure? A valid break of structure must sweep liquidity. It must take liquidity, right? I want to see, these are movements to the upside, but the price came to take this liquidity here. What do I mean when I say liquidity? Liquidity simply is the stop losses. When you trade from this point, the price was retracing to this point to react from this order block. When it is reacting from this order block, when we are buying, where do we place our stop losses? It is below this low, right? It is below this low. That is why the price came all the way down. It came all the way down to take all the stop losses below this low, and then now it went up to do what? To break the structure. I believe you understand. So I want to see a sweep of liquidity. And then number two, there is something called Fibonacci retracement. I want to check the Fibonacci retracement levels. Sorry for this. I want to check the Fibonacci retracement levels. If I place my Fibonacci retracement from this point to this point, check it out. I told you yesterday, if you check this is 0.5 at this point, there's a 0.5 at this point, there's a 0.5 at this point. Let me show you. This 0.5 is 50%. Now above this mark, this 0.5, above this 0.5, what do I mean? Let me show you. Now whatever I'm saying is this. Whatever I'm saying is this. Sorry for this. Whatever I'm saying is this. Sorry for this. Sorry for this. Let me remove this first. Yeah, now we can continue. Now whatever I'm saying is this. Above this this 50, this 0.5 line above it, we have a premium zone, and then below this 50% and below we have, yeah, you understand, above it we have a premium zone. A premium zone is where we sell from this zone, yeah, above the 0.5, and then below this zone, below this 0.5 and below, it is a discount zone where we buy from. Anytime you go to the shop, you buy things at a discount and then you sell them at premium. That is the exact thing we are doing. Above 0.5 we sell, below 0.5 we buy. Now I want my price, my pullback to retrace to below 0.5 or 50%, and then now I'm sure that it is in the discount zone for me to buy. Those are the two things I check: sweep of liquidity, and then I want to see the pullback being a valid pullback by going below 50% retracement when it is retracing using my Fibonacci retracement. That is all. So what can I say? I can say that this break of structure to the upside, this break of structure to the upside was very, very valid. This break of structure to the upside was valid. Now I want you to see this. The price went up, broke this structure, right? And then it came back. It came back, but let me check out. It never swept any liquidity on this side. It never took any low on this side. And then it went up to break this structure. So I can say that this is an inducement. It is just lying to us that when the price will retrace to this point, we take a buy, right? But it is lying to us. This is a setup. This is a trap. This is a trap for traders. So I'll wait until the price goes below this mark, and then now I'll do what? I'll buy, just like that. Okay, that is simply what I'm going to do. Now what did the price do? Let's check what the price did. The price came, let me mark this sweep of liquidity. Let me mark this sweep of liquidity. What did the price do? The price came back. The price came back. The price came back. The price came back. You know, it induced traders to take a buy from that point. It induced traders to take a buy from that point. Let me show you. Now, many traders took a buy from this point, putting their stop losses below this low, yeah, and then targeting this place as their take profit. This is what they did. Let me show you what they did. Once the price retraced to this point, to this order block, this is our order block, this is our demand zone, this is the where the price pushed to the upside. Now what they did, they waited until the price tapped into this order block, and then now they took a buy like this. They took a buy like this. Once they took a buy, they placed their stop loss below that low, and then they targeted this above this eye. They targeted this eye, yeah, which is a good trade because it is a risk to reward is almost 1:4, right? But now what happened? What happened? Let me show you what happened. The prices came back. They came back, took this liquidity that was below this, yeah, and then once it took liquidity, what happened? What happened after it took this liquidity that was below this lows? It went up and broke structures. So you could have waited until it takes liquidity, and then now you do what? You buy, just like that, and then you target this eye. Every time my break of structure must take liquidity. Now let's go to the last one, this one, the last move. Now let's analyze what happened at this place. Now I want you to see this. The price was moving up. When it was moving up, before it broke structures, it left some gap here. If you are seeing, there's a gap here, right? There's a gap at that point. So let me mark with this one. Let me mark this gap. This is a fair value gap. Sometimes prices behave this way. They leave a gap behind, and then they'll come back to fill it. Now this is a fair value gap. This gap must be filled to attain equilibrium before the prices continue doing what? Going up. So what am I expecting? Whatever I'm expecting is this. I'm expecting for the price to retrace back into this fair value gap, Now before my setup was like this, but I don't think if it has played the way I expected. I wanted this price to move up. I wanted this price to move up to break this structure. I wanted it to move up like this. It was somewhere here when I was analyzing. I wanted to move up to this point, break this structure, and then once it has broken this structure, it will come back to this fair value gap and even tap into this order block that is below the fair value gap, and then it will go up to break structures. Why do I say this? Listen, there's something here. I wanted this to be our inducement. I wanted this one to be our inducement, but all in all, we don't have an option. The price, we can't control how the price moves, so we accept. Now what am I waiting for? All I'm waiting for, I wanted this one to play out, but it never played out, but that is what I expected the prices to do. Now I'm waiting for the price. Let me show you. I'm waiting for the price. Sorry for that. I'm waiting for the price to come back into this, take this liquidity, that inducement, and then now what will happen? Sorry. And now I want it to come back into this fair value gap, even into that fair value gap, and then go up to break structures, just like that. That is what I'm expecting. I'm expecting that this gap that was left here, the prices must come back, tap into this fair value gap, and then do what? Move to the upside, just like that. Now our liquidity is this one, this inducement. The price came back. This is a very nice inducement. The price broke this structure and then now came back to create some inducement and then went up. Now this will be our liquidity levels. The price will come, take this liquidity, tap into the fair value gap. If possible, it will tap into this order block that is here, and then our demand zone, and then it will go back to take this high. So my trade, I'm expecting to take a trade from this point. I'm expected to take a trade from somewhere here. Sorry for that. Let me remove this first. So I'm expected to take a trade from this point to the upside, but I am not going to enter blindly. I'll go to the lower time frame to check for a change of character before doing what? Before entering, and then I'll target this place. I'll not enter like that. So this is my predictions on the fair value gap. So I believe you understand. So we are waiting for the price to come back. Sorry for that. So I'm waiting for the price to come back. Let me show you what I'm saying again. Now, I told you for me to say that this is a valid break of structure, I need this break of structure to take some inducement, which is this one, and then taps into this gap, because it is a very big gap and we want to attain equilibrium in the market, a balance. So it must come back, fill this gap, tap into this order block. That is what I'll wait until it taps into an order block, and if it fails to come to this order block here, and then I'll check my change of character from this fair value gap to the upside. I'll enter my trader somewhere here, and then I'll target this high to be taken out. Once an internal liquidity has been taken out, we go for the external liquidity, which is this end point here, right? Just like that. So this is the analysis on the USD JPY pair. So I believe you understand how we identify a valid break of structures. Let me summarize and say this. For us to say that this is a valid break of structure, number one, it must have what? It must have a liquidity sweep of liquidity, or our inducements. It sweeps our inducements and then does what? Number two, the retracement must be 50% retracement levels and below when buying, or 50% and above, 50% above when you are doing what you are selling. So I believe you understand. For example, in our case here, let me use the Fibonacci retracement so that we can know where we'll wait for our prices. If I put this was my last low, and this is my highest high for now. So if it pulls back, I'm expecting it to come below the liquidity. Exactly, I want it to come below this liquidity because the 50% is at this point. The 50% is at this point. Check it out. Let me delete this Fibonacci retracement. Now the 50% is at that liquidity, so I'm expecting that liquidity to be taken out for sure. So if you want a trade, you can check for a change of character at this point to the downside and trade up to this liquidity level first, and then you wait for it to tap into this, change a character here, and then you buy. You can sell and then you buy. Now it is upon you, but you should be careful. If you want, you can wait for the price to come back, and then you do what? Yeah, you can wait for the price to come back. Tap into this fair value gap, check for a change of character, and then target this high, just like that. So that is how I personally identify my valid break of structures. I just don't mark breaks of structures without checking for a liquidity sweep. There must be a liquidity sweep, and that pullback must be a valid pullback. Otherwise, I'll not enter the trade until I check those two main things. Just like that. That's how I'm able to identify my valid break of structures. Otherwise, may God bless you. Continue working hard and things will be fine. Yeah, otherwise, let me wish you all the best. Yeah, that is the end of our lesson for today. Yeah, that is the end of our lesson. So let me end this recording at this